A bloodbath in Indian markets from the global stock slump has not displaced the country's reign among Asian peers. The pace of India's losses and the reversal since Monday's crash is better than other Asian markets. In this next report, we dive deep into the reasons and performance. Take a look.
Indian stocks took a knock in this week's worldwide market downturn on Monday. However, they remain Asia's best performers. The country's benchmarks have outperformed other Asian indices, with gains of over 10% this year still intact. In the short term, extreme volatility is expected to weigh on stocks. However, investors project the Sensex and the Nifty indices to recover strongly and return to life highs this year. Both benchmarks are not too far away from their all-time highs, and gains have easily outpaced a few losses by a large margin this year. More importantly, the bull run is driven largely by domestic investors, with foreign flows staying on the sidelines for much of this year so far. India's robust economic growth outlook suggests foreign investors are not too far from jumping into the country's growth story. While Japan has turned into the epicenter of global investors' worries about the practice of carry trade in the yen, India has been largely unaffected. With a mere $20 billion or less than 3% of the world total, India's share in this trade is quite modest. India's financial system has become more robust because of the Reserve Bank of India's stricter regulations. The country's excellent economic performance and large foreign exchange reserves have shielded it from the effects of the yen carry trade reversal. Following Monday's devastating loss, the dollar staged a robust recovery, putting pressure on the rupee in global markets. As it approaches the historically significant 84 per dollar barrier, the Indian rupee keeps sinking farther into record low territory. Despite the central bank limiting the extent of changes using its reserves, the currency is expected to tiptoe to record lows going ahead. Separately, shares of Indian textile manufacturers are supported by the political instability in Bangladesh. That country's massive textile industry may see a decline in business as customers worry about supply delays caused by the ongoing upheaval. Indian manufacturers are expected to fill the void. Stocks of KPR, Mill, Arvind, and Wellspun Living soared on Tuesday. Reason? Investors bet that India will be able to increase its shares of the international garment export market. Business Bureau Report, WION World is One.